The supply of USDC on the Tron blockchain has surpassed $100 million dollars only 2 days after listing on that blockchain. So, taking a step back, USDC is a stablecoin, operates typically in the Ethereum blockchain. And according to a nice Zach Stewart scoop from, I think, 2 weeks ago, they're now moving to 10 different blockchains, Tron being one of them, apparently. So what does this mean? Like typically you see Tether is kind of like the dominant stable coin on a lot of these networks, and these are privately issued stable coins. So there's a dollar somewhere in some private bank account that's typically monitored or maybe not monitored by a government entity. And then they issue an asset on chain that tracks a dollar. People use them a lot of times just for trading back and forth on exchanges or moving money across borders. Here, they're using Tron just because it's cheap. Typically, that's the only answer. Tron has a lot less security than other blockchains, but it's very, very cheap, and it's becoming kind of a go-to for a lot of these stablecoin networks. Zach, gonna toss down to you. Did you see this happening like 2 days at $100 million? That's probably up there for like stablecoin records in terms of issuance. If you're keeping
Yeah,
track of that at home,
I was looking at some of the blockchain explorer data, and it's like really interesting to see like the top holders. It looks like Poloniex is like the third largest holder of this with like 10.4 million in USDC on Tron. So I think it's like exchanges sort of like swapping some assets to a different chain, as you mentioned, to reduce fees associated with their underlying networks. So it's really interesting. I mean, I think uh, I learned this the other day, but yeah, Tron is the biggest network for Tether. Like there's more tethers on Tron than there are on Ethereum, which I thought was quite interesting. So the fact that USDC is also getting on Tron um, could be quite interesting in terms of Tron, in terms of USDC's growth relative to Tether's growth in the market. By far, USDT Tether is the big gun, and then USDC has been gaining ground in recent months, but Tether is still the big dog. So the fact that Tether works so capably on Tron is potentially interesting if others start fleeing Tron and if others start fleeing USDT, and you see USDC as a better bet. But yeah, I don't know. It was interesting to look at some of the data associated with the blockchain on this one, and there's always good nuggets in there. So that was cool to see. Jen, what were you going to say?
Well, I'm still wrapping my head around the story, but I do have a question for Will. What does this mean for Ethereum and its future?
looks like Ethereum has failed. No, so there's a few different threads you can pull on here. The first is like there's different stable coins, and they're all competing against each other. So we talk CBDCs, private stable coins, algo stable coins. In the private stablecoin land, which is like the most dominant form right now, basically have USDC, which is like Coinbase and Circle's coin, versus Tether, which is Bitfinex's coin. So that's interesting. In terms of like USDC or stable coins on top of Tron or Ethereum, traders just kind of go where things are cheap. Right now, prices on Ethereum, they're still expensive. Even like they were much more expensive earlier in the spring, but it's still expensive compared to what you would pay on Tron. So traders just go to where it's cheap. You get less network security overall. So if there's someone really tried to attack the Tron blockchain and get some assets off of it, it's more likely to happen than it would on Ethereum. But overall, I just think it shows a demand for cheap transactions across borders. I don't think it really says anything about Ethereum versus Tron at this point, besides Tron's a little bit cheaper. Adam, your take?
Yeah, so I want to draw back the lens a little bit again here and talk about what the point of these private stablecoins are from a business standpoint. From a business standpoint, whether you're talking about Tether, you're talking about USDC, effectively what you're talking about are companies that take one of your dollars and then give you a token that represents a claim on a dollar that you will never claim. So once the dollars have gone into these various systems, effectively the company that administers the stablecoin just sits on them and then earns interest on those reserves, which are quite meaningful. Now, at the beginning, when we set up this story, we talked about it as if there were dollars sitting in a bank account. And for a long time, that was the story, but that's not actually the story. We recently learned that Tether first and then USDC later actually have diversified their reserves into a variety of types of debt, which they then earn interest on. So I would take this from the other side. I don't think there's demand driving this at all. I think there's there's supply driving this, where effectively you have these different companies just trying to grab as much market share as possible. And to the extent that they can make Tether look like they're incompetent, or they can make themselves look like they're just better than Tether, is to the extent that they can accomplish that, because they're effectively identical as far as vehicles are concerned. So it's really just a question of who's making more money. Is it Bitfinex on the one side with Tether, or is it Coinbase and Circle on the other side with USDC? Somebody's making money, and that's what these stablecoins really are about.